All right. Hey guys, it's lesson 3 of the marketmakersmethod.com course hosted by myself, Nick. So leaving off from continuing from where we left off from lesson 2, actually, is we're looking at the same pair, Euro AUD. And interesting enough, so this is the full screen here, how I told you is that, in a cycle, and as you're taught is most often what you'll see is, okay, so you'll see, if here we formed our head and shoulders and we're analyzing this, and we have, okay, so we have each of these, so these tracers right here. So let's now start talking about these tracers, right? Because as we progress in each video, not only are you going to receive the slides, and that will tell you more in depth of everything, all the components in the system, but I'll be slowly telling you everything, and that's how this course is going to be structured. So these period separators right here, these are separating the day. So this is one full day right here. This is second day. So hopefully that makes sense to you guys, is that everything in this period is one day. Everything from here to here is another day. Day 1, day 2, day 3, right? You get it. You understand that. Okay. So one thing is that we'll see price move in bursts of 3. Now, it could be 3 days of rise or drop, or 3 pushes, right? And the way that I teach it, and the way that's more accurate, and the way it's going to simplify your entire life with this strategy is, okay, so ever since the peak formation, we had what? 1 day, 2 days, and 3 days of rise. And then we have a reversal, right? After 3 days of rise, it comes comes the M formation reversal. But one thing that's interesting enough is we're going to analyze this next few cycles on this pair. And I really want to show you just how to look at this in this way, okay? So let's clear all the drawings here, and let's move on here. So initially what we saw with this cycle is, okay, so we saw our what? Number 1, identify that, look at your TDI, and it's completely at where? It's next to the 67 and the 70 is the 63 and the 67, right, at these 2 lines. And it's coming outside the volatility band, and it spikes back inside. Okay, that's quite not yet any type of confirmation. But given that we had 3 days of rise and that TDI is completely up here, what do we have here? Is we have our head, our shoulder, head, and shoulder. Okay, so we have our head, shoulders. Okay, head and shoulders identify as what? Our peak formation. Okay, so if this identifies peak formation, now what we actually had here is we had price retest the 200 EMA, the mayonnaise, which is very powerful, at TDI outside and back inside. But what we saw here is another multi-session M. And this right here creates one large M formation, right, at the mayonnaise like this, rejecting off of the mayonnaise. And it creates one large. This right here would be a 22 trade, taking this. A 22 trade, right, a 22 trade. What I mean by 22 trade is that you're taking the second leg of a second leg big fat M formation. So you're taking the second leg of a big fat M formation. That's what a 22 trade is. And now as we kind of come here and understand that, okay, this was our multi-session M with our head and shoulders. So we're going to keep this actually drawn out here. So I'm going to use black here. So we had, okay, head and shoulders as our peak formation. We come back to retest right here, and then we form another M formation, causing this to be a multi-session M, or a BFM, big fat M formation. Okay, so yeah, these actually do exist. And ever since we get this, now what we start doing is we start calculating the cycle. Okay, so and with that being said, is okay, well, we can come back here and analyze. Okay, so we had right here was the 16th, right? Then we had the 19th. So what happens here is we box off, right, this Asian session because it's the first Asian session of the week, right? And what happens here? False move, week beginning, and they start working the area above it. And you expect, okay, 1, 2, 3 days already of working the area above the PSR. So what you're expecting already is a reversal. Always note that your PSR will always be drawn before analyzing anything. And then you mark down these key components by seeing the pattern with the TDI, understanding that this is a multi-session M. Then you have level 1 of drop, right? So this right here is level 1 of drop. This right here is level 2 of drop. And notice that at each of these levels, how price perfectly rejects off of the moving averages, which we're going to get into moving averages right after we're done with the cycles. Okay? And then we have our level 3 drop. 1, 2, 3. 3 levels of drop. And then what we have here is, watch this carefully, it's November 30th and then December 3rd. That means that this right here is your PSR, psychological support and resistance. Box it off, and what do we have here? TDI already came and spiked completely below 37 and 32 already on this leg. Then we come here and we have a pin here to the stop on box, another pin to the stop on box, and it come here in a railroad track. You kidding me? You got the dealer. This is your entry, but this is your initial induction. Look at TDI, outside volatility band, second leg is back in. Initial induction, this right here is a W formation, my friends. And what we see from here then is we expect the cycle to continue now bullish. And we expect stop hunt low rise, stop hunt low rise. So notice how all these things are soon starting to get together. Now let's clear all the drawings and let's move on initially with the cycle now. So once we have this cycle established, right, now we can calculate, okay, so right here, we didn't really have any movements to the upside. This was kind of just like a reset. This was they just consolidated price right here on the 3rd. Okay. So what we are looking for now is, okay, so we have, and it's kind of like a head and shoulders as well, because let me show you this. And this is actually close enough to current time, because the 3 times ADR, it will change once a week, maybe once every 2 weeks. The average daily range of each pair will change. And that depends on however much volume, whatever the higher powers, determine what the average daily range is for each pair. Normally, Euro AUD has a large ADR. GBP pairs have a larger ADR than, say, Australian pairs or New Zealand dollar pairs. I don't really trade the base pair NZD because their ADR is so low. You're not going to get paid enough. You have to really trade larger contracts. So with that being said, now we have what? So after this W formation was formed, okay, so now we start calculating, well, how many days of rise did we have properly? Well, if this right here was the consolidation, then we have 1, 2, 3. And then we have what? CDI is already ranging all the way up here, 68 and 63. This one already spikes all above here. But then what we had here is, for this leg, we had a bearish engulfing with price being divergent. So this high, it made a high here, and then it made a lower high here. Price being here made a higher high, but indicator made a lower high. So we have divergence there. And then coming into the 15-minute time frame, would see a nice M formation there where we can actually enter. And then what we expect then is stop hunt high and drop. And then we'll get into what happened here. This is a multi-session M, multi-session W off of the mayonnaise, which is a reset. So now let's get into the 15-minute a little bit. I don't want to go too much into the 15-minute chart and what to expect, because we need to understand timing and when to be looking at the market. Can't just take M's and W's at any random time. So let's clear these drawings now. And let's come here. Let's establish our PSR. And let's go into the 15-minute chart. So taking a look at this now is, okay, so on the 15-minute chart, we had TDI that was already all the way oversold right here. And then we had our initial induction, right? And look at this right here. As we start to see this, we have a pin bar that forms right there. We'll get into candlesticks actually. The pin bar comes here, railroad tracks to the downside and railroad tracks to the upside. This right here, my friends, is the W formation. And let me show you a good tactic is you can always take your MT4 platform and change to the line graph. And with the line graph, you're able to see these moves, the M's and W's, a lot nicer. Notice this W here had divergence. Why? Because the second leg is lower than the first leg, but on the indicator, the second leg is higher on the indicator. So it was going down, indicator was going up. Notice that. That was our initial induction. Now what do we expect is we're only expecting stop hunt low and rise. That's all we're expecting now. And on the 15-minute chart, you're going to be able to see more often now the rejections off of the EMAs, which we'll get into. Don't worry. So we expect what? We're expecting outside the Asian range, we expect a stop hunt low and rise. Okay? So that's exactly what we got. Didn't quite catch on to the stop hunt box, but we had a pin right here, and matching with this pin, look at this, matching with that pin, what happened right here? Let's remove that. Notice that. A spike right here, just below the volatility band and back inside, like a shark fin. That catches a stop hunt. Let's zoom in here so you guys can see it properly. Came here, spiked down below it, and came right back up off a pin. And we expect this stop hunt low and rise, V1. You got the market maker. You get in off of that close. Stop loss goes about 12 to 20 pips below the low on the ADR. So initially your stop loss would be about 20 pips below the low. Okay. So now extending this is, okay, so we have our push one. Now, coming into this is we didn't quite have any stop hunts, but I want you guys to know is that in the PDF that you guys saw, what this is a strike zone. Notice how at this time, all the EMAs are crossing like this and this using this effect. This just confirms the trend even further. But notice that variation on the time. Market makers will not always hit the stops and create these different types of patterns at the same time every single day, every single week, every month. It would be too easy and everyone would be rich, right? They need to change up the time, variation on the theme. So coming out of here, we always expect stop hunt low rise. Here we had a stop hunt low. And interesting enough, remember from the slides that I told you in the previous lesson is that the trap moves will begin at the end, right? At the beginning of each session. End and beginning. This is the beginning of the session. This is a trap move. Pins right below yesterday's New York session. Look at the TDI. Shows you with this aggressive pin to the downside. You know that your trend is to the upside, so you're not taking trades short. I don't care if the pattern happens here. If you see an M formation right here, I don't care. You're not taking it because you're only taking trades long, in line with the peak formation that was created. Now that we have this established, now what do we expect here is stop hunt low rise, stop hunt low rise. Okay, cool. We're in an uptrend now. Look at the moving averages now. Here's your Asian session and here's your London Open. We had a stop hunt low. Didn't quite come to the stop hunt box or really break the Asian session, but look at the TDI here. Look at the TDI. Outside and back inside forms the W formation. Now, you had a pin right here, this pin to the 50 EMA, the water, and then we had a railroad track pin away from it. Your entry is there. Stop loss goes about 12 to 20 pips below. Is you were expecting these, you were anticipating a stop hunt low rise. So you don't need to get confused when you see an M formation because you know that you expect them to hit the stops to the downside. And you wait for numerous factors such as TDI to show you and the pattern and the timing all to come into place. And this is how you catch sniper entries, right? So coming back into here is let's clear out these drawings. and understand that, okay, so if we know that we had what, ever since we had right here is, okay, so we had one day, this is our second day of rise. Here's our third day. So we know the cycle's not done yet. In order to determine the reversal of the cycle, we'd go and look back at the 1 hour time frame. So we still expect a stop, hunt low, and rise. This is our induction. We're not taking this. Right here, we have a pin bar. Come back up here. An entry right here would be fine, and you wouldn't be stopped out, but a better entry would be at this W formation. Let's look at the line graph, which W looks a lot better. Comes here, aggressively moves down. One more spike, one more move to the downside for second leg. And even TDI shows a nice W formation. Both of them showed you a pin bar. That's why we understand this, is that both showed us a pin bar. Pin bar and pin bar. And we expect a rise because we expect to stop, hunt low, and rise. So I don't care if you see something like this and you see, oh, them working the area above here, that could be a short. No, you're only looking for trades to the upside in line with the peak formation, with the market maker cycle. And this is what a lot of people will get wrong, and they'll never become successful. So let's zoom out again now, and let's go back to the 1 hour time frame. Now that you got a little bit of taste of being able to see the 15-minute chart. Okay? Now coming into the reversal here, as we had our first leg, but notice something interesting is that level 1, level 2, level 3, W formation. W formation like this on the 1 hour aggressively on a 200 EMA, you're already going to start seeing, okay, it rejected off the EMA, off the 200 EMA on the 4 hour on the 1 hour time frame like this. You're already suspecting, okay, so this could be possibly a reset, and this trend may continue to the upside. Right, and this peak formation here may just be locked in on a lot larger time frame for a longer time frame. We had price come back up here and it reject one more time off of the mayonnaise. We know that this trend continues to the upside now because we had a confirmation with a pattern that we had a multi-session M formation with divergence off of the mayonnaise, and then just trend continues to the upside. Now, with that trend continuing to the upside with a big multi-session M off the mayonnaise, now we do expect stop, hunt, low, rise, stop, hunt, low, rise. Now, notice also December 7th and the 10th. Notice what happened here is that boxing in our PSR, our first Asian session of the week, notice something interesting here. Now, we still haven't had any inductions yet, but what we expect is, okay, day 1, day 2, day 3, midweek reversal. The induction went to the downside off of the PSR. Notice that. This is why using the PSR, psychological support and resistance, is very important, because notice that we made this and they went and created their induction to the downside. And then not to mention the pattern here, which was very significant, divergence outside volatility band, back inside volatility band, spiked inside the volatility band. And this right here is the W formation. So they did the induction to the downside from the PSR, and we had TDI confirm this move on the 1 hour off of the mayonnaise. Let's take a look at the 15-minute chart. Notice how the EMAs will get back into this. What we expected here as well, right? You don't take this trade because we already had the peak formation, and you're not taking this trade at all because, okay, we had their peak and we knew that we were going to the downside already established from the 1 hour time frame. So you're only taking trades to the downside. Notice how pin here, blue tracer, which was yesterday's high. Second leg comes here, pins it perfectly just above it and to the downside, rejecting off of the EMAs. Then what we have here, new day, we expect what? A stop hunt, high, drop. What do we have here? Look at this. Came here, vector candles, 1 push, 2 push, and 3 pushes for the larger candles, vector candles. Then we had first leg form, second leg form. Look at that. That's an M formation. Look at your line chart. Let's zoom in. Look at TDI. Outside volatility band like a shark fin. Second leg back inside. You got the dealer. It's lights out for the dealer. Entry is right there. Stop loss goes about 20 pips above the high. You got in here. Your first target is the bottom of the Asian box. Then you can start targeting the 800 EMA. You can go on the 1 hour chart and target the other EMAs, or you can hold it for the rest of the cycle. But I will talk more about targeting for take profits, or you can always take your 50 pips and run, which Steve teaches. But I want to teach you guys how to know when to stay into cycles that are going to milk. You're going to be able to milk the pair for 200 plus pips. Okay. We had here, then Asian session forms such a nice W formation with this pin here on the second leg. TDI comes here. Second leg rejects off of the volatility band. Already have divergence going here. That tells you something. And notice that on the fifth, remember the moving averages, you're going to see this in the slides next on the moving averages. Price rejects off of the 800 moving average, the blueberry, on the 15-minute time frame, but on the 1 hour time frame, it rejects off of the 200 EMA. Isn't that amazing? These EMAs are calculated like that. It's quite fantastic. Then what you expect after you have this peak formation, you know you're going to the upside. Now what all you expect is moves to the upside. Stop, hunt, low, rise. Stop, hunt, low, rise. So, and knowing that, you come here and you're saying, okay, but what about the PSR right here? Well, number one is I want to abbreviate this a little more. Look how, number one on the PSR, how we perfectly spike to the PSR, come back, spike to the PSR, spike to the PSR, and how it behaves like this, right? Come here, spike, PSR, closes inside the PSR, comes back up one more time, closes back inside, M formation. And why we're looking, okay, you might be asking, well, Nick, the initial induction is going to the upside and there's like an M formation here. But what just happened right here? Huge multi-session M rejecting off the 200 EMA to the upside? I would hope so that you're not countering this. And also, when you have a new peak formation set, now you're looking for the 3 times ADR. So when you're calculating the cycle like this, and you have, okay, from this pin to here, you have about what? 530 pips. So it's a little bit more than the 3 times ADR, but that's likely where you want to be looking for reversals, right? From right here to right here was 430. Now, if you have this peak formation from peak to peak, you're looking for the cycle to go 400 plus pips, as long as it meets the 3 times ADR. Come into the 15-minute time frame. Once you establish the peak formation and where you're trading, you expect stop hunt low rise, stop hunt low rise, right? That's exactly what you get. You only trade stop hunt low right here as well. You had a nice W formation off of the mayonnaise. Look at this. First leg, outside volatility band, back inside. Look at this stop hunt right here. Spike. So remember, you're only taking trades long. You're only taking trades. This is a long zone only. No shorts. Don't counter trend. Okay, look at this. TDI, outside volatility band, back inside. Spike, rejecting off the mayonnaise. You got the dealer. Again, we come here outside of the Asian range, which is the market maker spread. And then coming into London session. Oh, look, there's an M. Do not counter. We're only looking for longs. Now we catch them with this. TDI spiked right below the market baseline and came back up with this pin bar right there and this railroad track engulfing. You take it to the upside because you know where you are in the cycle. So hopefully this is starting to be more educational for you for the cycle. And then of course, you know, the EMAs are going to work wonders for you because the cycle is still not yet over. And you monitor this by looking at the 1 hour time frame. Okay. So initially now you are looking on the and notice how you have right here on the 1 hour time frame. Look at this rejection of the stop hunt box, but it rejects right through the 50 EMA and comes right back up. You are not taking this short. No freaking way. Now, let's come here and let's zoom out because it's a lot easier for you guys to actually see. December 21st and then the 24th. Right here was interesting because this is actually current time. And this was actually, right, the market was closed on the 25th. And the market is also going to be closed tomorrow as well. Notice now, we draw this here. Let's extend it. Okay, so this indeed is your PSR. This is a little bit differently because we don't have the 25th here. We're missing a whole day. But it's the same pattern. We had our induction to the upside, M formation, but we need more confirmation for the trend. We can take this And in fact, on the 15 minutes, we did, in fact, get this nice pattern with the TDI spiking to the volatility band and back inside. But we want something for more confirmation. This is also Christmas, so it's not a best example, but eventually what we had here is a proper stop hunt on the 1 hour with a pin bar here. Let me show you. Pin bar, pins to the EMAs, another doji. We had a quarter wood. And back inside the PSR, you should be going long this trade. Look at the TDI on the 1 hour time frame. Take a look at the 15-minute. The 15-minute is even more noticeable because this is a very, very good anchor point right here. Look what we had here. As TDI, so we can see this better, as TDI is revolving down below the 37 and 32, notice how it comes to the volatility band, but then this first leg right here, on the second leg, we had a pin that came here and grabbed the orders just below this first leg. Notice how it rejects off of the blue tracer, which is yesterday's low. And we had another pin to the upside, and you should be in this trade going long because we had divergence as well. Price made a lower low. Indicator was making a higher high. Divergence and this W formation looks perfect below the PSR. And then, of course, what we expect then is outside the Asian session, London session, we expect a stop hunt low rise. Okay, we get that right here. And notice how it's off of the EMA. This is very powerful. Second leg outside the volatility band. First leg, second leg, taps the volatility band, comes a little bit outside and goes in. Look at this red bearish candle spiked right there. And you take this going long because it's rejecting off of the 50 EMA, which is your support, and which that you saw the $1 million slide that I showed you guys that you guys have access to. Notice that level 1 and level 2 are likely to be rejecting off of the 50 or the 200 EMAs. Same thing here. It came down. TDI outside volatility band, and it's rejecting off the EMAs. Okay. So hopefully that's getting more, a little bit more comfortable with looking at all the different, aspects when it comes to the daily cycle. Let's kind of bring in the Australian Japanese yen into play here. Now this pair has really been trending to the downside, and we haven't had really much movement here. Let me check the time on this lesson. Okay. So we can continue analyzing, and I want to kind of show you how, okay, when you see price that's not giving you proper setups, or you know that we just had our cross here, we're only looking for trades to what? Trades to the downside. So with that being said, if we have our peak formation here, which is identified by a very visible M formation, you can even look at your mustard, which is going to be your 5 EMA, which will allow you to see the M formations better. And now you know that, okay, what you're expecting is, so, I mean, you only really technically did have right here, when you look at it, is, okay, so it's like one level, so really nothing here. Two levels. And I'm still expecting more further drop on AJ, okay? So let's take a look at pound CAD, one of my favorite pairs actually to trade. Very lucrative, pays a lot per pip, actually. most than others. And I'm going to come here and just quickly take you through more in terms of the cycle now. So the price action that you have here is, this is a reset. Why is this a reset? Is because, well, price opened and closed exactly at the same price, but we also had a stop hunt low and a stop hunt high. And when you have price action like this and it just goes up and down and price opens and closes the same price point, that's a reset. This is now your new peak formation. This right here, though, is quite lucrative, because if you take a look here, November 9th and the 12th, this is our PSR, first Asian session of the week. Let me get rid of this right here so you can see this. Look at this. Spiked right to our stop hunt box. Right below, this is our induction for the week. Now, on top of that, look at a TDI trading all the way to the downside, giving us this type of head and shoulders pattern. Second leg here rejects off the market baseline. This is a clear W formation. You take this to the upside. Now, if you're looking at the 15-minute time frame, look at this right here. Divergence, W formation. Now what you expect is what? Stop hunt, low rise. Okay, look at this. This candle right here, rejecting off the EMA, but most importantly, we had this candlestick come here and this big bearish candle rejecting off of the EMAs, and it closes past these two previous candles, meaning this momentum to the upside. Look at this. TDI also rejecting off the market baseline for this pair. So hopefully that you guys will start understanding this in the cycle. I do want to make one more video on the cycle. Right here, this was the pound pair is just having this type of price action, which is just chopping. And notice how the price is by the 800 EMA and it's just flat. It's just trading flat. The 200 and the 800 are just still, and it's just trading flat like that. The EMAs are not being fanned out, meaning the cycles aren't even working. Same thing here. Wait for the EMAs to at least start flattening. Wait for proper cycle, proper movement. Then look at this right here. This is our PSR. Our PSR for the week. False move week beginning. This is our initial induction. Look at our TDI. Makes that W formation right outside and back inside. You got the dealer. You enter in right there. Now, going into the 15-minute time frame is where you see this. Okay, so you had your W formation and divergence, right? Second leg was lower on the TDI. The second leg was higher, but first leg outside volatility band, second leg inside volatility band. Come in here. Now, to further validate this is, take a look at this, is you have a head, almost head and shoulders pattern. Take a look here. So you have right there, shoulder, head, and shoulder. And this spike, right, one more spike here to grab all the pending orders and for the weaker short holders. And for the weaker long holders as well. The ones that got in here but placed their stop loss in profit too early and get stopped out, get wiped out. Then we had what? Coming off of this leg, we had one level 2 levels. Remember, we're counting the aggressive moves up. Three levels. Look at your TDI already. And broke the market baseline and trending to the downside. Notice head and shoulders. Notice aggressive move. Level 1. Level 2. Level 3. What do we expect? Stop hunt, high, drop. Stop hunt, high, drop. I got into this trade with all my members. We took this trade long. This was an anchor, and this yet holds as an anchor. But also notice that PSR happens here, and then we have our induction to the downside. And it moves up. And then notice right here as well, right, let's take a look at the line graph. Clearly see the 3 levels of drop. Then we have our W formation to confirm the peak. And we also have a cross of the EMAs. Go back to the regular chart. Very, very powerful. Let's clear everything off the board. Move back into here. Then what we expect is what? We expect stop, hunt, low, rise only. Once the peak is set here, once the peak formation is set, peak formation, we expect a stop, hunt, low, rise. We're always expecting a stop, hunt, low, rise until further confirmation that indeed the cycle is over and it's time for a bearish cycle. Coming in here, let's clear all drawings. 15-minute time frame. It's a cycle. Once that right there, look at this also. This nice rejecting 2 times off the market baseline. Coming here, look at this pattern. Nothing beats the pattern more. And we have our expected stop, hunt, low, rise. But what we have here is we had it in bursts of 1, 2, 3. Look at that. 3 is a very psychological point in this, is that the cycles will move in 3 days of drop or rise, 3 pushes, 3 vectors, 3, 3, 3. 3 is it's ingrained in human psychology. It's what makes us actually we see, oh, 3 pushes to the upside. It's what makes us enter in to that cycle continuing long, because we think 3 and we think, okay, things come in 3, whatever. 3 strikes are out. You know what I mean? Come here, we expect stop, hunt, low, rise. TDI outside volatility band, back inside. We expected this. Okay? And we're further expecting more. We can take the stop hunts, low, rise. Okay? You're only taking trades to the upside. Look at this beautiful trade here. 1, 2, 3. W formation. Second leg rejects off of the mayonnaise. TDI outside volatility band. Second leg is back inside. You take it long. So hopefully now you're getting more and more comfortable with this. And be back next video with the moving averages, with the TDI, and we'll start compiling more things together. Okay? Thank you. See you next lesson.